Good afternoon and welcome to NYFP. In mid-afternoon trade, the major U.S. stock averages remain on a mixed note. Joining me this afternoon to discuss the markets is Doreen Mogavero of Mogavero & Lee. Hi, Doreen. Thanks for joining me.
Oh, thank you, Rami. It's great to be here.
Well, we got the U.S. jobs report earlier this morning, and the unemployment rate did remain at 9.1%. The non-farm payrolls did come in better than expected, but overall, what's your take on the report?
Well, I think that although the numbers were very good, the expectations recently have been very low. So it's been easily met. And I think that that's kind of where most of the traders I've been talking to are. Although the number used to be to really spur growth, 400,000 new jobs being created a month, and now people seem to be happy with 100,000. I think from most of what I've read from economists, we need 125 to 175, that's sort of the range of opinion, of jobs per month to really spur growth. We got under that today, although an improvement. I don't think that most people really feel that it's good to sustain any real growth in the market.
Well, Doreen, now that we've covered the jobs report, I do want to move on to technicals as well as sectors. Earlier this week, you saw the S&P 500 dip into bear market territory, but we did recover from those levels. And in terms of bank sectors, we're seeing some pressure following the downgrade of some UK banks by Moody's. What's your take on that?
Well, I think financial sector is still, obviously, it's one of the most important sectors in the market and heavily weighted in all of our indexes, so it's something we watch all the time. But I think in terms of the pressure being on it, the European situation is still in great part an unknown. And I think the exposure to these banks is something that everybody is looking at. I don't know particularly how much exposure each individual bank has, but I think in terms of the sector, people are worried that the exposure to Europe, should there be a domino effect, say if Greece were to default, is still pretty unknown to most people. So there's really an air of caution. And they're using these rallies to maybe lighten up on some of those financial sectors.
Well, so Doreen, looking ahead to next week, we do have a holiday shortened week for the federal government, but U.S. markets will be open on Monday for Columbus Day. What will you be paying attention to next week?
I think always housing numbers and things like housing, jobs, all of those numbers which are core to the economy, obviously, and any news that comes out of Europe. Those are the things that, it sounds as though I keep repeating myself and everybody's repeating themselves, but these are the three things that we are looking at primarily, and obviously any news out of the Fed, any statements. Strangely enough, I think a lot of the news that's coming out of Washington is really the only thing that's somewhat kind of not, discounted, I suppose. Nobody really is looking at that unless it's some kind of big political news. Otherwise, the three main points are what we'll be focused on.
Okay, Doreen, thank you so much for your time today and have a great weekend.
Very welcome. Thank you. Have a great one, too. Happy Friday.